Hey traders, this is my weekend video, and it's going to do a quick analysis what I'm seeing in the markets and some thoughts that I'm floating in the back of my head. I think we might have put a pretty significant top in for the market. Okay, that's my primary thesis here. Okay, going into tomorrow's session, I think we're going to get some early profit taking. So basically, I have an alert set right here. What I would typically like to have seen in this wave 5 exhaustion, and that we would have broke out above resistance and then started a possible new count, back testing above critical resistance. Instead, we came up in wave 5 below resistance and failed. And on this micro count right here was wave 3 right here. We're currently trading below that wave 3 on our Russell. So this micro count is now invalidated. We got a new count we're setting up here. It shows 1 right now, but that may not be valid. The 1 could actually be up here, and we're doing a 1 leg lower, okay? So we don't know for sure where the 1 is going to play out, how this is going to play out. But, but basically, no matter what, even if we gap up tomorrow, we are in a new wave count. This micro wave count is done no matter what. Okay, and what we could actually be doing is an ABC, two, three leg. We did all kinds of chop for the past couple of weeks down in this lower area on our micro counts. So that's definitely in the cards, a possibility here. But right now, I just want to point out the count that we were in a Thursday going into Friday. That's done. Okay, that's my main takeaway going into the earlier session. Now, Elliott wave is not supposed to give you direction. It's just supposed to give you the odds of the better setups for the long side or the short side. Because what you're wanting to trade is from wave 2 to wave 3, typically, either up or down, because those tend to be the bigger moves using Elliott wave. Okay, and so basically we are just technically starting at wave 1. So that in itself should tell us that, the risk reward early tomorrow should be less, that's not necessarily on our side. We really want to trade that 2 to 3 scenario in our trading. So be mindful of that in your sizing on your trades. Okay. Another thing we're looking for, if you go on to 1 hour, oh yeah, my fib's right here also. Let me show you guys. On the 30-minute here, it's easier to show it on this time frame. Okay. So basically, if you look at this prior countdown here, okay, we've had a lot of A's and B's, so you can't really, typically, these A, B's, C's are connectors into a bigger wave 5, and weren't getting wave 5s. We were getting a lot of chop, so that's why we got all these A's and B's and stuff. So if you go from the bottom of this Elliott wave down here up to wave 5 and do a measurement on that. Okay, that's the last time we had an Elliott wave, 5 wave count. Okay, so in theory, that should be a floor for the market, for the Russell in a bigger correction. So that's 1863. So just remember that 1863 when you that should be a significant floor right there. So in the bigger trend from the bottom to where we're currently trading, a logical retracement would take us all the way down to 1880. That's the 23.6 retracement on a bigger time frame. Okay, on a bigger time frame if we were doing something like that. Ordinarily, what I would try to do is identify the smaller time frames, what would be a measured move. But with all this chop going on right here, I can't necessarily do that with the Russell. I do want to point that out. What I can say is the 200% move. It doesn't show that. The 200% move from this consolidation down here, that's another logical target to be coming down to the downside. That's going to put you down to the 1892 area. Okay, and we're not that far away from that. Okay, so just keep that in mind. We are currently fighting a weekly pivot area, so I'm looking to be coming into tomorrow's session, hopefully below that weekly pivot, trying to reject. Okay, so we have a weekly pivot and a daily pivot here. two really important areas. This is chopped out in these zones before. Okay, so basically we've hit here, came right back down to the bottom of that. So just definitely keep that on watch. That'd be 1885 or so, 80, 85 or so. We just this last Thursday we came down to that area. So be mindful of that. Now on the 1 hour, I want to go ahead and show that. And I do want to point out what I always look for a finishing of a wave pattern. So in a bigger time frame, we have a bigger wave pattern. So 3 ended here, 4 is down here, right? Okay, you see where that 3 is right there? So anytime you violate that 3, which we currently are right at that, so it's a really iffy whether or not the bigger time frame, if the count is completely dead yet. Okay, they're holding it right there. So if we come in tomorrow morning, gapping above, gapping higher from where we're currently at, the bigger time frame count, we're currently in a wave 5, could still be valid. Okay, so just be mindful of that, and depending on how you do the count. How could I do this here? Yeah. So like 1, 2, that'd be 3. Okay. 4, right there. Okay. And that would end that count. Okay. And then your 5 would be up here. Okay. And then you would have to start another count. So it'd be 1, 2, possibly putting in a wave 3 to the upside for a breakout wave, possibly for the Russell to the upside. So just keep that in mind. We might potentially be in a 3 wave to the upside still on the Russell. So what we want to see coming into the morning, that we're breaking these morning lows into the morning session, to think that there's going to be a reversion trade. Okay, but this 3 is really critical here, and it looks like they're trying to push down and break it. We're right there trying to decide whether or not to do it. So be mindful of that on the Russell. Okay, and it has been absolutely on fire for January. So I could definitely see them trying to trim profit to clear out that, to finish off the month. So negative divergence, what you would see with a 5 wave pattern. That's what we got going on here. So it's not really supported. This move up is not supported. That's what it's suggesting to us. Okay, go back on a 30-minute here. Okay, guys. Some main takeaways that I got going on here. We don't have the A's and A, B's, and C's really happening here on the ESs. We only had that real big chop on the NASDAQ. Okay, so what we got going on here, this Fibonacci retracement right here represents from this down here all the way up to 3. So from the count low to the count high, okay, up till 3, okay, and it gives you a measured move of that range, okay. So we know 3, this bullish count is still valid as long as we don't take out 3, and we are getting awfully close here. So we're currently in wave 5. There it is right there. Okay, we might have completed this wave 5, but this is still a valid wave 5 until we break this. Okay, so this count might not be done. We're still in a bullish count until we break 40.60. So be very mindful of that. I do think we're going to probably come down and test it early. If we do come down and test it, that suggests the Russell will break, because the Russell's already there ready to break. So be mindful of that this thing's probably going to be probably early on in the session tomorrow, probably at 40.60, really testing critical support to start the week. So be very mindful of that. Okay, that's our break line, 40.60, and we officially close out the current bullish count. Okay, but until we break out 40.60, the bull count is still valid. Okay, guys. And then another thing I got on here, from wave 4 to the current wave 5. A typical measured move retracement puts us back down to just 38.2. Okay, so that's the problem. The problem we got going on here. Your typical, corrective wave would put you right back into that support as well. So, there's two forces saying that we're probably going to come back and do a hard test of this support in the overnight session. Now, in the bigger time frame over here, in the bigger time frame, just to retest the first level of support would break this and invalidate our current count. So I got three things there suggesting that you don't want to be loading the boat to the upside. You just because you're actually you got your negative divergences. The final push up here is not being supported very well because of the bigger negative divergence. There's a lot of short squeezing up to these levels, and we do know these levels are very critical. This is a major pivot area. The 4100 area is a major pivot area, which we've rejected in the past. Okay. Flash NQ. So like I said, the Russell looks like it could be leading the charge down. So be very mindful of that. Okay. Now our counts here on the 30-minute aren't very telling here on the uh, NASDAQ. So we might have completed wave 3 to the upside. Might. Okay. It's hard to, it's very subjective on a wave 3 count. We are into daily resistance and there's weekly resistance above us. They could take us up into the weekly resistance before they finish off wave 3. It is a possibility. Okay. This is an extremely elongated 3. We've had a very good past 2 weeks here in the Russell. So it takes a long way to invalidate the current count. But we are, very strong, possibly looking for a wave 4 reset, for a possible wave 5 even higher. So the count does suggest that we have not topped out yet on the Russell, where the other indices suggest that we might have. Okay. So let's just keep that in the back of our mind here. What I've got going on here, our typical minimum pullback. Okay, we got our current high right here, our current low. A minimum on our pullback would put us down to the 12,066 area. That's our bare minimum expected pullback. Okay, but what lines up here almost perfectly, that I have to point out here, this is your typical pullback. That's 11,927. And that almost lines up perfect with the long-term expected minimum pullback. The long-term expected. They almost line up perfect. So, I am actually looking, more and more. Let me put a rectangle right here real quick. That this area is probably going to be satisfied tomorrow. Okay. That this area down here will probably get satisfied tomorrow. And that's still your minimum long-term pullback. Ideally, your long-term pullback is going to be down here, okay? And it's still a valid bullish count. Even if we come down to here, you're still valid, okay? You're still valid even on that count right there. Another thing that I wanted to point out, which one was it? I can't really show it on this. That was on ES's. Well, let me go on the 1 hour real quick here and finish this one off. And then I'll go back to the ES's. 1 second here. And then on the 1 hour, I did want to point out, we do have a negative divergence. We're actually on the 1 hour. I want to point this out. Let's zoom in here, guys. We're actually touching right here the cross on the 1 hour on the NQs. Okay. And giving us a possible bearish cross. And it's not actually, if you look on the ES's on the 1 hour, see, we've already crossed on ES's on the 1 hour. All right, okay. So we have actually already crossed here on ES's, giving us a bearish signal on the ES's here. Okay. Another thing I wanted to point out, which I forgot to mention earlier on ES. Okay, in a very bullish trend, the 23.6. You really don't want to go too much past that 23.6 for a retrace. you know, okay, for a retrace. And so I want to point that out, the 23.6. Now, here's what we did Friday, okay, or Thursday. We came in Thursday off of this higher low, and you just got to keep this in the back of your mind here, okay, guys. If this was a really bullish push, up into 11,000, our minimum pullback sh should have kept us above the 38.2. Okay, when we came up, we shouldn't have had a pullback, you know, down this deep into the range. Instead, we came up to the 38.2 and rejected. So be mindful of that. You know, this they were finding some sellers right here early. They shouldn't have found sellers here. They should have been finding sellers up here on this initial move up on wave 3. So they were actually getting nervous ahead of where they should have in this move. So be mindful of that. Okay. So that's all I got to say. I mean, obviously I've got a bearish open scenario playing out here in my mind. So I don't know. I could be dead wrong tomorrow. I'm only doing puts in the morning. I don't care. No matter what happens, I'm only looking towards the puts personally. So we will see. I do think we are setting up for an ABC corrective period. Probably going to be a lot of chop setting up here in the next couple weeks. We may have plateaued for a good while if we even hold these levels. Okay, so that's my main thesis that I'm going on here. I do think what you're going to see is institutional traders sit on their hands at this price point to see if the retail traders can push prices higher where the institutions can sell into them. Okay, that's a primary thesis I think's going to start playing out here. That the institutions are going to start sitting on the sidelines waiting for uh, dumb money to come in and for them to sell into at any higher prices. So I don't know. We will see. Okay. Thanks a lot for listening to my video. Please like it if you get a chance on YouTube, and please retweet me on Twitter. I'm at Gumby9662C if you're not following me. And I do appreciate all your guys' feedback. You can please give me feedback at the bottom if you can. Things if you're seeing something I'm not seeing. Thanks.